Question 33. A city orders a new computer for its general fund at anticipated cost of $88,000. Its actual cost when received is $89,400. Payment is subsequently made. Prepare all required journal entries for both fund and government-wide financial statements. What information do the government-wide financial statement present, and what information do the fund financial statements present? Let's first prepare the journal entry for government-wide financial statement. And for this transaction, the city purchased a computer and paid later. So when the company received the computer, journal entry is to debit the computer and the credit accounts payable. Assume because they made payment subsequently or later. And the amount is $89,400. That's the amount on the invoice. And then when the city paid for the computer, journal entry is to debit accounts payable and credit the cash, the amount that they recorded on the book as accounts payable. Okay, so the journal entry prepared for government-wide financial statement is the same as what we normally do for those private sectors for the companies. And this is the government-wide financial statement. Next, let's prepare journal entries for the fund. So here we know that we are preparing journal entry for a general fund. So we need to first input the name of the fund, that is the general fund. And then as to the journal entries, first let's give you, kind of remind you of a few concepts or a few accounts we might use in this type of transaction. So the first one is preparations. Preparation is what we use normally in our budgetary process, and that's the all approvals for expenditures or how much is approved that company or the city is authorized to spend. And second journal account is called encumbrance. Encumbrance are the summation of all purchases committed but not complete. It's like a purchase order in this question. It's the committed purchase but not received yet. Okay, so that's a committed purchase. And the last one is the expenditures. It's a summation of expenditures of all type in all programs. And here the expenditures are the actual costs incurred by the state or local government. Those are the actual costs. Would be different from the cost they expected to pay. Okay, because for example in this question, they anticipate the cost of the computer is $88,000. The actual cost is $89,400. There's some variance. Okay, as to the journal entry here, when the city submit purchase order, and that has to be recorded, and we use encumbrance to record this committed purchase, and we debit encumbrance. This is for computer, and credit encumbrance outstanding. And this is a temporary account. When the city actually receives the computer, they need to reverse this transaction and then record the computer at its actual cost. Okay, so next one, when the city actually receives the computer, so as I mentioned, they have to reverse the prior transaction, which means that they need to debit encumbrance outstanding and credit encumbrance computer. Those are temporary accounts, so with this second journal entry, we just zero them out. They're going to have zero balance. Okay, next one is to recognize the receiving of the computer. And for the fund statement, they do not maintain any capital asset or long-term asset. So for the computer, we debit expenditures computer. So that's actually expenditure, is not asset. And on credit accounts payable, which is the short-term liabilities, which is going to show up on the income statement, on the fund statement. So the fund statement only focus on the accounts that are going to impact their current resources, or current asset and current liabilities. For those long-term asset, long-term liabilities, they are not going to show up in their balance sheet. Instead, they are going to be recorded as expenditures. Okay, next, when the company actually paid for the accounts payable, we debit accounts payable and credit cash of the actual amount.